Welcome back to Investing Talk Podcast.
Today we're looking at Rocket Lab. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis of the source material.
Yeah.
When we look at Rocket Lab, we have to start with the obvious. The fundamental growth story is, well, it's exceptional, even by aggressive tech standards.
Exceptional how? What are we seeing?
We're seeing demand acceleration that is significantly outpacing the overall aerospace sector. It's really quite striking.
Okay, and when we talk about aggressive growth, I assume we have some specific numbers to look at.
We do. For those tracking the metrics, the trailing 12-month or TTM revenue reached an impressive $504.26 million. That's as of late October 2025.
$500 million, okay. But that's just a snapshot, right? What's the trend?
Exactly. That's only half the story. The real market insight here is the velocity, the speed of growth. The year-over-year increase they posted in 2024 was, well, it was a staggering 78.34% growth from 2023.
Wow, nearly 80% growth
In
in 1 year.
Yeah. Within the space sector, that signals really aggressive market capture, maybe even, sort of niche monopolization in their current segment.
So they're executing really well on their existing contracts, their backlog.
Extremely well. But that spectacular revenue growth brings us immediately to the tricky part, the complexity that scares off maybe more traditional value investors.
You mean profitability?
Exactly, profitability.
Right. We've just praised this huge growth, but how can we justify holding a stock that's still, burning cash? Quite a lot of it, actually.
Well, hold on. How much are we talking?
Rocket Lab remains unprofitable, which is, an immediate red flag for many. The TTM net loss stands at $231.31 million. That's substantial.
It is substantial, absolutely. But we have to compare it to the scale of the expansion, These aren't just random losses. They reflect necessary and ongoing investments. We're looking at a company spending massive amounts on R&D, research and development.
Which they need to do, right? If they want to move up, compete on bigger things.
Well, precisely. It's crucial if they want to move up the value chain. The key distinction the source material highlights is that these losses are actually narrowing relative to their rapidly expanding revenue base.
Ah, okay. So the loss isn't growing as fast as the revenue.
Right. They are achieving operational efficiency improvements even as they build out completely new infrastructure. That's the important context.
Okay, that context is vital, because if they were losing money while revenues were just flat, that would be, well, a disaster.
A catastrophe, yeah.
But here, the loss is kind of the cost of buying future market share. Is that the idea?
That's a good way to put it. And the question then becomes, do they have the runway? Can they afford to keep spending like this?
Do they? What's the balance sheet look like?
Yes, they do. The balance sheet looks robust, which is sort of the third leg supporting this bullish fundamental view. They have modest net debt and ample liquidity. Their cash reserves seem sufficient to fund this aggressive growth agenda for the foreseeable future.
So no immediate danger of running out of money?
It doesn't look like it. No immediate solvency concerns are flagged. And actually, for long-term investors, this continuous reinvestment of cash back into high-growth, high-margin potential projects is, well, it's a massive bullish sign, even if it pushes out the date they hit, standard GAAP profitability.
Okay, so the financials support the growth story, despite the losses, but they wouldn't be growing like this unless they had a strong competitive position, right? A moat. What gives Rocket Lab this power to accelerate revenue so fast and keep competitors at bay?
It seems to be a two-part strategy. First, they really dominated the niche they basically created. The small to medium payload launch sector. They were early, they were reliable, they offered frequent launches using their workhorse Electron rocket.
The Electron, right?
Yeah. They're one of the few globally offering reliable, commercial dedicated launches for smaller payloads. That was key.
But just launching things, isn't that eventually a commodity business? Prices come down, competition increases?
It could be over time. And every source agrees that their real competitive advantage, the more durable one, is the shift they made into vertical integration.
Okay, what does that mean in practice?
They aren't just selling a ride into orbit anymore. They moved upstream into space systems. This is centered around their expanding Photon spacecraft platform. It lets them offer differentiated, sort of bundled solutions.
So they don't just launch your satellite.
Right. They can help build it, maybe power it, manage the constellation after launch. This whole vertical integration piece, launch services, space systems, constellation management, That's what structurally elevates them above the pure-play launch companies.
Gotcha. That sounds like a much stickier business model.
It is. That's the ultimate long-term strategic advantage. Their expansion into satellite manufacturing makes them a critical enabler, almost like infrastructure, for next-gen space stuff.
And that leads to stickier clients, I bet, especially government or defense.
Absolutely. Growing brand strength, proven reliability, particularly in these integrated systems, translates directly to high switching costs. The sources specifically highlight that this integration has helped them secure high-value, long-duration government defense contracts. Reliability and integration are really prized there.
And speaking of long-term strategy and R&D spend, we absolutely have to talk about the Neutron rocket.
Yes, Neutron, the big one.
This feels like the ultimate symbol of their aggressive spending and their future ambition, right? Electron made them known, but Neutron is supposed to make them a major player.
That's the goal. The Neutron medium-lift rocket is their entry ticket into the much larger, highly competitive medium-to-heavy launch market. That market's currently dominated by giants like SpaceX and ULA. It's a massive undertaking for Rocket Lab.
So if Electron let them own the small launch niche,
Neutron is designed to capture a much, much larger slice of the future market. Think bigger satellite deployments, maybe even crewed flight down the line.
and the development costs for Neutron, that's a big chunk of why they're still showing those large net losses we talked about earlier.
Exactly. That's where a lot of the R&D money is going. But if they succeed in bringing Neutron online reliably, reasonably on time, well, that unlocks potentially orders of magnitude more in contract revenue.
It really changes the company profile.
Completely. That shift transforms them from just a niche provider to potentially a foundational infrastructure company for global space access.
Okay, so it's the ultimate risk-reward calculation, really.
It absolutely is.
Yeah.
Neutron's success pretty much justifies the high valuation the high multiple investors are paying today. But any serious technical slip, any major delay, feeds right back into that execution risk we have to keep talking about.
All right, now let's pivot. Let's see how the market is actually pricing this story, this fundamental picture, the technical analysis.
Well, it tells an extremely aggressive story too, doesn't it?
Oh, absolutely. The stock has been on a tear. It's surged over 150% year to date.
150%. Yeah. And it's currently trading around the $65 mark. This is based on the source material compiled in late October 2025.
So that confirms a very strong uptrend, technically speaking.
Definitely. We've seen the stock trading consistently, quite comfortably, above both its 50-day and its 200-day moving averages. That's textbook bullish momentum right there.
But you cannot approach the stock without acknowledging the volatility, right? It moves around a lot.
You really can't ignore it. That volatility is measured perfectly by the stock's beta. It stands at 2.15.
Okay, 2.15 beta. Remind us what that means.
Sure. So a beta over 1 means it's more volatile than the overall market. 2.15 means if the general market, say the S&P 500, moves 1% up or down, you should theoretically expect Rocket Lab stock to move about 2.15% in the same direction.
So bigger swings, definitely not for the faint of heart or someone needing stability.
Not at all. Expect outsized swings, both up and down. It amplifies market movements.
And if we look at the actual trading levels, where are the key points traders are watching?
Well, those high beta swings get tested often. Major support seems to have been holding pretty strong between 62 UNs and 63 THARs.
Why is that range important?
It seems psychologically important. It's where institutional money, the big funds, have consistently stepped in to buy the dips after quick pullbacks or consolidations.
Okay, so that's the floor for now. What about the ceiling, the resistance?
On the upside, short-term resistance looks like it's forming around the $67.50 to $70 range. That's the next hurdle to watch.
And if the momentum keeps up, what's the outlook?
If the growth story holds and the market cooperates, the bullish 3-month range outlook, according to the analysts we looked at, suggests it could potentially run up towards $75.
And that momentum isn't just technical, right? Sentiment seems strong too.
Very strong. We've seen significant accumulation by large funds. You can see it in the regulatory filings.
What filings are those?
The 13F filings. That increased institutional exposure means the so-called smart money is actively adding RKLB to their portfolios. They're buying into the structural shift in the space economy.
And what about retail investors, the everyday traders?
On the retail side, sentiment seems overwhelmingly positive. You see heavy volume, likely driven partly by FOMO, the fear of missing out.
Right, FOMO can really fuel a rally.
It can. That's partly why the volatility remains high, but it also creates that sustained upward pressure on the price.
And what are the professional analysts saying? Are they aligned with this?
Generally, yes, they're aligned with the optimism. Now, the consensus price target is around $51.75 to $51.82.
Wait, that's below the current price of $65.
It is. That reflects the fact that the stock has run up so fast it's blown past many of the older targets. But the key thing is the ratings. 10 out of 15 analysts surveyed still rate RKLB as a buy or a strong buy. They haven't downgraded just because the price ran up.
Interesting. What about the range of targets? Is there a high end?
There is, and this is where it gets really interesting. The upper end of the analyst target range shoots all the way up to $83.
$83. That's quite a jump from $65.
It is. That big gap shows the analyst's belief in the company's, multi-bagger potential if the execution story stays flawless, especially regarding Neutron. That's the kicker.
Okay, beyond the fundamentals and the charts, we should probably touch on the market chatter. Is there speculation fueling some of this short-term excitement?
There definitely is. While it's unconfirmed, there's significant market speculation buzzing around Rocket Lab right now.
What kind of buzz?
It mainly revolves around potential major contract wins. Specifically, there are persistent rumors of a key partnership in a major upcoming government lunar mission.
A lunar mission, that would be big.
Huge. The other major speculative track is the potential for new, substantial defense contracts being awarded for Q4 2025.
Where are these rumors coming from?
Some of the original chatter seems traceable to places like Twitter, maybe accounts like @SpaceWatcher were mentioned in the sources, but again, they remain unsubstantiated. Rumors.
Right. Purely speculative at this point.
Yeah.
But with a stock that has a beta of 2.15?
Exactly. Speculation can have an outsized impact. If either of those rumored contracts, the lunar mission, or new defense deals actually materialize and the company makes an official announcement.
That would be a massive catalyst, wouldn't it?
Instantaneous impact. It would significantly expand the backlog and act as a huge positive news trigger for this stock.
Okay, so moving from the purely speculative to the more concrete, what are the imminent catalysts? Things investors should actually track in the next, say, 0 to 3 months.
The most immediate and probably the most critical trigger is the earnings report. It's scheduled for November 10th, 2025.
What should people look for in that report, besides the headline numbers?
Yeah, the focus won't just be on the year-over-year revenue growth, although that needs to continue strongly. Investors really need to see evidence of margin improvement. Are they getting more efficient? Also, a continued reduction in that loss-to-revenue ratio we discussed. And maybe most importantly, any expansion of the confirmed contract backlog. That shows future revenue visibility.
Okay, earnings on November. What else?
Beyond earnings, we need updates on the Neutron development program. Any firm timeline advancements, successful test milestones, anything like that would be a major catalyst. It validates all that R&D spending.
Makes sense. Contracts, too.
Yes. We should also expect, or at least hope for, new contract announcements before the year closes. Both government and commercial launches, and potentially new deals within their space systems and satellite manufacturing division.
And you mentioned one other date, something about ETFs.
Right. Finally, a date maybe more for short-term traders to mark on the calendar is the ETF rebalancing event. It's scheduled for December 20th, 2025.
Why does that matter?
Well, Rocket Lab is included in several high-growth thematic ETFs like space ETFs or disruptive tech ETFs. When these funds rebalance their holdings based on new weighting rules, it forces buying or selling of the underlying stocks.
So it can cause price swings.
Almost guaranteed to generate some temporary volatility around that date as the big funds adjust their positions. Could be an opportunity or just noise.
Okay, lots of potential positive catalysts. Now for the crucial flip side. We have this bullish 8.5 out of 10 rating overall. What could go wrong? What are the key risks that could seriously challenge this thesis?
Good question. The primary risk, as we've touched on a few times, is execution risk, and it's really concentrated heavily around Neutron.
How so?
Well, in the space sector, technical setbacks, launch failures, cost overruns, they're unfortunately common. It's hard stuff. And while Rocket Lab's operational track record with Electron has been stellar, truly excellent, a major slip on the Neutron timeline, or a significant failure during testing, that could materially impact near-term financials.
And probably investor confidence too, right?
Oh, absolutely. It could really damage confidence in that whole long-term vertical integration story that underpins the current valuation.
Okay, execution risk, number one. What else?
Secondly, we have to revisit the profitability timeline. They are still burning hundreds of millions of dollars a year. If that revenue ramp unexpectedly slows down, maybe because of a technical setback with Neutron, or maybe just increased competition heating up faster than expected.
Then the losses become a much bigger problem.
Exactly. Those continued losses will exert immense pressure on the stock price. It would likely force a major reevaluation of their current high-growth multiple. People might say, okay, the growth isn't fast enough to justify these losses anymore.
Makes sense. And the third risk, you mentioned volatility earlier.
Right. The third key risk is just inherent sector volatility. Given the high multiple the stock already trades at, and that eye-watering beta of 2.15 we keep mentioning.
If the whole market tanks or just the tech sector?
Yeah, if the broader technology sector, or specifically the new space sector, experiences a sharp correction, Rocket Lab shares are probably going to suffer outsized swings downward, much worse than the general market.
So investors need to be prepared for that ride.
Absolutely. They must be prepared for this inherent volatility. Maybe use smaller position sizes than they normally would just to manage that risk exposure.
Okay. So bringing it all together then, the final investment thesis. Where do we land?
Taking everything into account, the final thesis still leans heavily bullish. Which is why the source material suggested that 8.5 out of 10 rating. The structural rationale is compelling. You have exceptional, accelerating revenue growth. You have a deepening competitive advantage driven by that vertical integration strategy. And you have a very clear calendar of potential short-term catalysts coming up.
So the high growth, the strong competitive moat, the upcoming catalysts, it sounds like it could appeal to different types of investors.
I think so. It seems attractive for the short-term trader maybe looking to play those earnings results or a potential contract announcement.
But also for the long-term holder.
Exactly. Critically, it looks like a foundational play for long-term positions, for investors aiming to capture the structural growth of the whole new space economy over years. Assuming, and it's a big assumption.
Assuming Neutron works out.
Assuming they can successfully execute that pivot from mainly a launch provider to being a fully integrated space infrastructure enabler, with Neutron being a huge part of that.
Which brings us to the final big question, the one for you, the listener, to really chew on as you consider your own position and risk tolerance. We've seen the company's successful pivot so far, becoming this critical piece of space infrastructure, building satellites, managing constellations, launching reliably. But does this fundamental shift truly warrant the high growth multiple and justify riding out that high volatility long term if the ambitious Neutron program fails to meet its aggressive deadlines? That execution risk around Neutron really feels like the final hurdle you're ultimately betting on or betting against, something to think about.